On this episode of Pennies Going in Raw, Hugh and I discuss this week in the market, TRVN's massive move, fundamental analysis, Q&A, swings of the week, Hugh's DD, best reviews, and a scenario involving finding love with a female trader. We got a packed episode, so let's roll.
Hey, yo, check 1, 2. This is Flavor Flav in the building for the Atlas crew.
Atlas Trading, what the fuck is up?
There are traders, there are prodigies, and then there's legends.
We're up 4%, baby.
No way.
4 fucking percent.
Buy the fucking dip.
Hey, who told me about IDEX?
Like, dude, what the fuck? Like, someone just made, like, a lot more money than me on my trade.
You find out life's this game of pennies.
Did you check the portfolio?
Pennies. The margin for error is so small.
I bet Warren Buffett never did that.
And they out there making money right now off of penny stocks.
Them two guys is putting in work to make y'all rich.
The pennies we need are everywhere around us.
Time to think big.
Pennies Going in Raw.
Featuring Dan, Deity of Dips, and Hugh Henne.
Produced by Vinny Strokes, baby.
Welcome to the Penny Stock Podcast, sponsored by the Blazing Chronicle. Today is Sunday, August the 9th, and SPY is a soaring eagle with no signs of stopping until it's at least, $400?
Dude, 5. Easy.
Yeah, all-time highs in any given moment. I mean, dude, it's crazy. I know we talk about it every week. It's almost becoming like a joke of a segment. But yeah, it just seems like it's always going to go up regardless of any situation given.
I can't believe it. I really never thought that I would see something like this, especially not now.
I sound like an idiot. I mean, like 3 months ago, I was like, dude, no, Mom, you're not getting any blue chips. Everything's going to go down. And any day, sure enough, man, it's been awesome. Friday, there still was a pretty big drop, but still closed green somehow.
Yeah, the buying into the close was crazy.
Seems like people were in the clear, just sailing on every day except Friday. But on top of that, with everyone else doing good, did you do good? How was your week, man?
It wasn't too bad. I did hit my goal, which I didn't think I was going to do because, again, we talked about in the midweek podcast that I lost power Tuesday, and I was down in Atlantic City for Wednesday, and then when I got power back, I drove back for market open on Thursday. So I was all over the place. But Friday I was only up a little bit, and then after hours I soared.
So it seems like Friday was the only day that it seemed kind of really difficult to get green. But at the same time, TRVN was your swing of the week 2 weeks ago. And after hours, it got news approved. And you made a shit ton of money. I know that was awesome. So congratulations on that.
Thank you.
But what was that news? And I saw it had a huge drop earlier in the day. I mean, was it market manipulation or whatever it might have been? Can you kind of explain the news and then also maybe explain your thought process throughout the day? Did you load those dips, etc.?
Yeah, so I think it was important because I got some flack because I did originally say that one of my first price targets was around the $3 mark, which was a 50% mark. Like for 2 weeks, that's, I'll take that. And like I said, there was no crazy DD on it. And so I did start to scale at 3, and especially as it moved closer to 350. But then when it dropped all the way back down to my original entry point, I felt the risk to reward based on my DD was there again. So I'm low. Like at one point, it was like underneath 175 or something. That risk to reward to me was insane because, like we talked about 2 weeks ago for our DD, 2 things that they had going for them. One, in 2018, they had a separate BDUFA. Okay, it's a alternate to morphine. And there's a lot of problems with morphine, and the FDA wants an alternative to morphine. So I knew that the FDA wanted this. Secondly, when the FDA in 2018, they didn't fail them, but what they did was they gave them a note that said, like, okay, this is what we want done. I think there was like 4 or 5 check bullet points. And so when talking with the company, they seemed extremely bullish that they had. I mean, of course they did, but just the confidence that I got from them. They said that the FDA loved their product. They just wanted them to, change a few things. And so I really felt that our risk to reward underneath 2 was more than good, because if it failed, the stock probably would have tanked, but I was willing to take that risk to reward. So even though I scaled out over 3, when those dips, I just saw pure manipulation. A lot of people were saying that there was like a leak, and there could have been. That was my first thought. But then there was no news that came after that. So I knew that, that was market manipulation. So what do? I was loading the dips, because even though it did drop a lot and the chart changed, the risk to reward was better now than originally, because we knew that news was going to come. So that's really why I loaded the boat. And then when I saw after hours, everybody was done. Like Friday, 7 p.m., I'm sitting on my computer just waiting for the news to come, because it was going to be a delay, a failure, or a success. So I'm sitting here. The news came out, and for like 2 minutes, nothing happened. So I tripled my position. I tripled my position. I slapped the hell out of it, and I tripled my position. And sure enough, I think all the major news outlets, that everyone subscribes to, finally picked up on the news, and I mean the thing just ran. It had like 10 green candles in a row.
So go back just 3 weeks ago or 2 weeks ago, I believe it is on episode 3. Hugh has his initial DD on TRVN whenever it was $1.98. Go check it out. It closed on Friday over 350. So 2 weeks, over 75% gains. So it all worked off of fundamental analysis, and that is the big part of this episode. And I like to always give the definition that the website says before Hugh just says, oh no, dude, it's everything. So, so fundamental analysis, its definition is a method of determining a stock's real fair market value, and fundamental analysts search for stocks that are currently trading at prices that are higher or lower than their real value. Is that a fair one, or how would you explain it?
Yeah, that's actually better than I would have assumed that they had. That's pretty much what it is. The concept is easy to understand, but where everyone gets lost is figuring out what fair market value is and like how to calculate that. So I think, this is a really good time for everyone to, if you don't have notes, I think you're going to need a notepad, because a lot of people get lost in this. So I think, this is a huge part of trading is your fundamental analysis. Right now, because everything is so overextended, there are less plays that we do that I quote unquote call undervalued. If you guys saw back in like February, March, we were playing a lot of things that were undervalued. Now, with the market at all-time highs, the fair market value is, in my opinion, everything is overextended. The fair market value is trading higher or overvalued. And obviously, when we're long something, we want it to be undervalued. So I get asked this question a lot. I think I tweeted about it maybe 2 weeks ago. I talked about the PE ratio of Amazon. And I talked about how the PE ratio of Amazon was 134x. And how the industry average is around 18 to 20 for a growth stock. And for a value stock, it's around, 13, maybe 15. So with them trading at 10 times that level, that means that people are expecting the Amazon to grow exponentially in the coming years. So before we get into the nitty gritty, what is price to earnings ratio? Okay, so it's the ratio of a company's share price, okay, by the company's earning per share. So how do we calculate that? We take share price, so say 100, divided by earnings per share. Now, how do you get earnings per share? Every time that a company, quarterly and annually, they give an EPS or earnings per share. That means that the amount of shares outstanding in the market, okay, when they do their earnings, it's how much do they gain or lose per share. So you'll see like 3 cents per share loss. So that means that for every share in the market, they technically lost 3 cents. Okay? So I think that is really key to understand what is earnings per share. So when we're trying to calculate this, you go back to the quarterly statement and you find the most recent earnings per share. okay? And then obviously the current share price. That gets you your price to earnings ratio. Now, your price to earnings ratio is one of my favorite valuation tools because that tells me what are people willing to pay for the future. Okay, so this is what they think the future of the company is going to go. So again, that your PE ratio is what investors are willing to pay for the future of the company. Okay, so again, I like
that whole formula: share price divided by earnings per share is the price to earnings ratio, which is his PE.
Yes.
You're right. Okay, so PE, price to earnings, and then EPS, earning per share. There's your acronyms. There's my 2 cents for everyone listening. You're welcome, guys.
Yeah, and so again, you kind of want to say, okay, now that I have my PE ratio, what does that even mean? And so what that, again, how do we tell if something is trading at overvalued or undervalued? And how we tell that is, again, if something is, so you have your value stocks, okay? That's something that you're not looking for it to grow exponentially, but it's probably not going to go down because it's a value stock. So that's your AT&Ts. Usually they're asset heavy. Your AT&T stock, your utilities, things like that. And then you have your growth stocks. And so that is, your Apple, your tech stocks. Most of your tech stocks are going to be growth stocks. So like AMD, things like that. And so your value stocks, you want to be trading around 13 to 15 PE ratio, and your growth stocks, you want to be trading under 20, I would say. Now, the S&P, again, is more value. So you would want the S&P 500 to be trading at around 15, maybe 16, because it is a little tech heavy. Now, the S&P is trading at 27, I believe was the last number that I saw. We can check that, but I think it was 27. So that means that it's trading.
Hey, Jamie, pull that up for me. That's a Joe Rogan joke. Never mind, just keep going.
So that means that the S&P is trading at significantly higher value than what its industry or the what it should be trading at. So that's why, when I look at it, in the 98 bubble, the S&P at its highest point was like 29.7. So we're getting close to where it crashed in 98. Now that doesn't mean anything because history doesn't, past performance doesn't indicate future results, but it's something to keep in mind. Like when you ask yourself, will the market keep going up? So that's price to earnings ratio. I think that that's one of the most simplest ways to understand a stock's value. Now, one of my favorite things was WTRH. WTRH, I think at its lowest point before Tillman came in, it was trading at
30
negative.
cents. You meant.
So the stock was trading at 30 cents, but the earnings per share was like 50-cent loss per share. So the EPS was negative 50 cents. And that was like, I think that was Q3 of last year. And Tillman came in around December and he fired the CEO because he was an idiot, and he completely reorganized the business. And I think I'm confident to say that by the end of the year, they will most likely be profitable. So, it's important. We talked about management last week, and this is really important. Tillman is able, anytime that I see Tillman on something, I'm usually a fan of it because it's not necessarily that he's going to keep WTRH forever. He'll probably sell it or something, but that's okay because he comes into companies and changes them. For something to go for that big of a loss, negative 50 cents per share, and for them to be profitable in 1 year's time is insane. It's outrageous. So that's kind of my PE ratio rant.
All right, so with all that being said, you use fundamental analysis as one of your main things for DD. One of your past calls was RMBL, Rumble, and before it's RS and even after it, it had some nice runs. Could you kind of go over maybe some of that fundamental analysis that you discovered that made you bullish on that?
Yeah, so again, one of the guys that's been institutional in my growth is obviously Incredible Bob. And one of the things that he taught me was how undervalued. So again, we talk about my matrix a lot. And, part of the matrix is it undervalued Okay, is there a catalyst and is there a chart? So when all three of these things meet, again, is there a catalyst? Is the chart sexy? And how are the fundamentals? Is it undervalued? When all three of those meet, it usually can become a supernova when that catalyst comes out. Now, you have to have a little bit of patience with some of these because the catalyst could be far out, and it being an undervalued stock doesn't mean that, like, you know, it's not like an FDA catalyst. So it might not take, you know, like TRVN, it might not go up 70% in a day. It might be like a slow grinder, which that's okay. There's nothing wrong with that. So one of the things that Bob taught me was, you know, to understand an undervalued stock. So with Rumble, now we'll go through this, but in the last year, they had increased their revenue by 400%. Okay. And it wasn't like those crappy shippers where, you know, they get like $1 million contract and they put out a press release saying that, you know, the revenue is going up 1,000%. That's not how this was. They had real hundreds of millions of dollars of revenue, and they had increased 400%. And this was even before Corona. So this was in 2019. So now, okay, that, you know, you say, Hugh, that's great. What else? But the stock had been down 97% inside that time period. So again, in 2019, they had 400% revenue increase, and the stock was down 97%. That alone tells me two things. One, it could easily be a super undervalued stock. Again, you have your anomalies that, like, you know, maybe they got a huge contract or something. But when they're an asset-heavy company and, you know, it's not like one car or one motorcycle is going to make up for that 400% revenue, that tells me right off the bat that something good is going on here. And then on top of that, with the stock being down 97%, that tells me two things. Either they did a lot of offerings because they had to, so kind of like EVFM did one huge offering, but it tanked the stock. So they either had to do a lot of offerings, and that tells me that the chart is probably pretty sexy and it probably has some gap downs. So, you know, again, everything that flies down, you know, has the ability to fly up, just like WTRH, just like, you know, UAVS, you know, everything that you know, is beaten down, you know, as long as you're not in the stock while it's getting beaten down, you know, it can create huge returns. So Rumble, so that was really huge with Rumble. And then, you know, the cherry on top of that was that, you know, they had, you know, I found some articles that said that because of, now this is when Corona was just starting out, that because of Corona, that 80% of car sales, they had some algorithm that 80% of car sales could be moved online for this year, and that there's an estimate that for the next 2 to 5 years that 60% of car sales overall would be moved to online. So this opens up a huge market opportunity for Rumble. It's kind of like Amazon. Amazon beat expectations last week by like billions and billions of, I think it was like $6 billion that they beat estimation by. And that's because, you know why? One huge difference that they saw was that in one market that they could never get into was elderly people never used Amazon. Because of Corona, elderly people were forced to use, you know, online and Amazon, etc., and that opened up a huge.
Dude, if you thought those infomercials with your grandma were bad, now she's got Amazon.
Yeah, exactly. So Amazon moved into a whole sector because of Corona that they couldn't even touch, and so that alone just catapulted Amazon, because now elderly people love it, but getting them to start something is impossible. But once they start it, you know,
good luck getting them off.
Yeah. You know what I mean? Like grandma has an entire screen just for Amazon. So,
yeah, dude. And another thing with the car thing you were talking about, that I actually tried to explain that to my old bosses, because I worked at a consulting firm that trained car salesmen, and I was like, you're not going to have many car salesmen soon. They're like, yeah, we will. I'm like, okay, Gramps. But yeah, I mean, that's a failing business.
No, exactly. And I think one of the biggest things with trading is that, and we talk about this, is that, you know, nobody cares if you called it 5 years ago, or nobody cares if you called it 5 years ago. If I can get the maximum return in a
shortest amount of time.
Yes, exactly. And I think that that's huge. And the other thing is that I want to be ahead of the curve. So if I'm not in something, but I miss 20% of gains, but I'm in it 2 weeks. So, again, we talk about this a lot, that I try to take a swing that's 2 to 3 weeks out because nobody's talking about it. We talked about TRVN, and literally at the beginning of last week, it was just starting to get noticed. And I was telling people, listen, wait till August comes. People aren't going to look for August plays until August is here.
Dude, and they're like, August? I'm like, that's so far. I'm like, dude, it's July 26th.
Exactly. I'm looking at plays for March, but that doesn't mean that I'm going to get in the play now. I'm looking at plays for next March. That doesn't mean that I'm getting into the play now. But you better believe that when the end of January comes around, I'm going to start, that stock is going to be up on my screen, and I'm going to be watching that stock, and the second that I see the volume increase, and I feel like someone's messing with it, boom, I get in. And so again, you want the biggest return in the shortest amount of time. So even though I like to get in plays early, that's because I like to get in it in like what I call the sweet spot. So when it's not too early, like I'm not getting in 2 months early, but I feel like I'm getting in before the crowd recognizes it. So again, TRVN.
So your sweet spot is 2 weeks? 2, 3 weeks?
I feel like 2 to 3 weeks is my sweet spot. I like 2 to 3 weeks. That's really what I try.
Because a week out, it's already started to move.
A week out. Yeah, I mean, even TRVN, if you guys look at the chart, I mean, it's had a nice run up for the last few months. But again, I'm looking for the best return in the shortest amount of time. So when I knew that TRVN was at the beginning of August, but I know how lazy some traders are. Like some traders are incredibly lazy and don't look for plays in August until August 1st. So when they see something that has a PDUFA on the 7th and it's the 1st, they're like, oh yeah, this is perfect. So we knew, again, you always got to be thinking. You always got to be thinking about the other side. So, we talk about TRVN. How the shorts are seeing the same exact, people that just do shorting, they are seeing the same exact chart, the same exact fundamentals as I am. I need to think like them. Okay?
Yeah. Have you ever, I actually had a couple things about shorting. Have you ever done fundamentals and we're like, holy fuck, dude, I'm shorting this for 2 weeks or buying a put or something?
Yeah, I don't usually short. I usually buy puts on something, and that's not on small caps. That's purely on mid caps.
And my other personal fundamental question was, that is the fundamental analysis the first thing you look for whenever you're doing it? Like go straight for price? Because I know you're a big cash guy.
Yeah. So. Yeah. You know what? I didn't touch on that. That's huge because obviously fundamentals include cash, and cash is king. Cash is always king. So when I'm looking at something, for anyone, if you went to college and you were like a business major, you probably had a good amount of time talking about PE ratio and stuff like that. And honestly, I hated it because it's not that I understood. I just thought that they didn't explain it correctly. So, and I don't think that you need 15 to 20 different valuation metrics. I know I'm going to open up my DMs on Tuesday or Monday morning, and there's going to be someone that goes, well, actually, Hugh, I use 7 different valuation metrics. And I'm like, dude, I don't care. I use 1, 2, or 3 that I work for me. Okay, my biggest issue with it in college was that they were giving me 15 to 20. I don't care. I just want the ones that are going to make me the most money. So for me, that's been PE ratio. And with that, I look at cash. Because just because Rumble was down 97% in the year doesn't mean that it can't go down lower. It totally could. I mean, even though we got in at like 32 cents, who says it can't go to 15 cents? And that's a whole, that's down a whole, I'm losing half my money if it does that. So, you want to look at cash, you want to look at PE ratio, and then also one thing that's not in, one thing that isn't really talked about, but the outliers. So you want to look at the competition. Where's the growth metric here? Even though Rumble is an online sales and that's where car sales are looking, can Rumble do that? Can Rumble scale to that size? And, they also had our catalyst was that the warehouse burned down. So, I actually went through way too many insurance claims and way too many insurance timelines to create a good enough of a timeline so that I could understand when, on the average time period, when they would get their insurance check for the warehouse that burned down. And I felt like I was right. I definitely wasn't. Well, I mean, I was right because they released an 8K, but they didn't really talk about it too much, which I was kind of upset at the management because they really didn't make it a big deal, even though they got millions of dollars. So I actually sent them an email and ripped them because they got the catalyst that we were looking for, but they didn't make a big deal out of it. So when you guys are looking at fundamental analysis, literally my breakdown is to look at the PE ratio. And again, something that we haven't talked about yet, but it's important to note that with certain industries, it doesn't matter. Hence, biopharmas, small cap biopharmas, do not even try. Because, I mean, you see EVFM, they had 3 years of expectation beats. Last quarter, 60% miss. This quarter, 150%. And there's nothing insane, except the only difference is that the operating expenses went up because they're bringing a new product to market. So please, dear God, stay away from doing valuations on price to earnings and fundamental analysis. Okay, if they have a short-term catalyst, look at the cash, understand if they're going to drop an offering, but do not, if you're trying to find the next Merck or the next Johnson & Johnson, whatever, stop, because you're going to get smoked. Okay?
Okay, so I think we can move into the questions we have on these, kind of run through them, because we've smoked fundamental analysis.
Yeah, I know, I
learned
learned
about
bit.
it.
My bad.
What I learned about fundamental analysis is that there is nothing fun about it. Okay, so with questions and answers, is it easier for penny stocks or large caps, and why?
Okay, so I'm going to answer this in 2 parts. One is going to be that I'm going to say large caps mostly because of the reason that you can apply most valuations to large caps. Where, as I was saying, is that smaller cap biopharmas, you can't really get an accurate representation for the most part when you're trying to do like EV, which is enterprise value, and when you're trying to calculate, future revenues, things like that. The other thing is that most of the time you can actually find most fundamental analysis valuations for large caps online, whereas as far as small caps, you can't. So if you can understand what each valuation means, then that means as long as you can interpret what each fundamental analysis valuation means, then most of them are online for the large caps because different online sites and different things like that will actually calculate for you, which is really cool. So overall, I'd say based on convenience and the fact that it can be applied to 99% of large caps, I would say large caps for sure.
Okay, so next question is going to be, do you only use fundamental analysis?
No. In fact,
big technical analysis guy too, huh?
Yeah. Again, my matrix is based on what is going to give me the best return in the shortest amount of time using all of the metrics. So again, you guys need to, even though PE is my go-to fundamental valuation, doesn't mean that it has to be yours. And it doesn't mean that, mine is, quote unquote correct, because it's not. Or, I mean, for me it is, but that doesn't mean that for you it is as well. So again, my matrix is based on, a mix of fundamental plus technical plus everything else that I feel is important, like volume and, management. Some things you can't quantify, like the management. You can't quantify that, and that's not fundamental or technical. So I kind of give that like its own, separate area. And I think that that's really important.
What is the difference in technical and fundamental analysis? I think this one's going to have to be for a later episode, but if you kind of want to give a little summary, a little quickie.
Yeah, so I mean, the fundamental analysis really digs into the bones. Here we go. The fundamental analysis really digs into the bones of the company. So, you look at financial statements, the health, its competitors. You're really, if I was going to do anything, you're really more of like a surgeon. Okay, you don't really care what the face looks like, but you're really going in to see, how much calcium she's got in the bones. Okay, where technical analysis.
I was waiting for an analogy.
Oh, dude, don't worry, I got a few more. And then technical analysis is more like so again, fundamental analysis is when you're looking for a wife. Okay, You really want to
Why
see.
do you need to know how much calcium your potential wife has?
Dude, it's an important metric. Are you
Okay,
kidding me?
fair. Well,
Dude,
I'm not a big milk guy, so.
Dude, I don't want little Hugh getting smoked on the football field, dude. If he gets hit, I don't want.
You don't want him having very, very fragile bones.
Yeah, no way, baby. Man, I gotta know her calcium. So again, fundamental analysis is when you're looking for a wife. Okay, you want her for the long term. You want her for the growth.
Mm-hmm.
You really want to see what's underneath the hood of the car. Okay, technical analysis is now again. I'm saving it for Mrs. Hugh. Okay, I do not. In no way do I.
Yes.
Condone this.
We're a virgin podcast.
Yes.
Me for different reasons. I just haven't had any luck.
And technical analysis is when, we'll say Vinny is at the bar and Vinny's looking for, a wife for the night. You know what I mean? So technical analysis, wife for the night. Fundamental analysis is the wife forever, the growth.
Well, the wife for life, not,
Yeah, the wife for life. You know what I mean? And I think that that's really, really important. But if you're creating oh man, this is so good. If you're creating the perfect wife, then you combine both. Because, on Friday nights when the little Hugh goes to bed,
Yeah.
you know what I mean? You want to go role
You're going to
playing.
watch a rated R movie. Oh, huh?
I was just going to say, you want, when the kids go down to bed on Friday night, you want to go to the bar and role play like you guys have never met. But...
What the fuck? This is how you imagine what you and your wife will do after having kids is you go to the bar and you role play like you never met before?
Yeah, it's kind of my thing.
We'll talk about this later, man. Next question. What fundamental metric do you look at most to pick a stock to buy?
We talked about cash and I like PE ratio. I think that's really important.
All right, cool. So that finishes up the unfundamental analysis. Now, to finish this bad boy off with our swings of the week, Q&A, formerly known as Question and A, Hugh's DD, and we got a nice little scenario involving finding love and trying to convince a trader that you know what trading is. Okay, so start off with swings of the week, brought to you by the Blazing Chronicle, as is everything else. AVGR, SPAC, or to Henrik Fisker, NONTX. I am swinging a little less because I'm a day trader, baby. So I did slim some of those down a little bit, but what are you looking at?
So of course we got SPAC, we got the EVFN. I keep getting this question and I keep reiterating the same thing.
Oh yeah, EVFN for me too.
OTLK, again, I don't know how else to say this. There's a huge seller, okay? You can see it from the price action, okay? It hit like a wall at 173, okay? This was supposed to be a run up to phase 3, okay? Now we still have some time, but I will not take a loss. I think it's really important. We talked about this a lot, okay? You can flirt with her, okay? If you know that she has a boyfriend, you can flirt with her. If the boyfriend's just gonna sit in the corner, but the second that he gets up and he punches you in the mouth once, that's when you get out. Okay, there's no point in fighting something that's bigger than you. All right.
If he just jumps straight to the punch? Can he not talk about it first? Could he not say like, "Stop hitting on my girlfriend"? Or are you just?
Oh, that doesn't matter.
Okay.
Yeah, that doesn't matter. Yeah. You know what I mean? We wait till we get punched in the face, but we understand. Okay, I'll walk out with a bruised
so right now that seller on OTLK is saying, dude, you better watch yourself, and you're like, no, bitch.
Yeah, exactly. He at this point in time, he went from sitting to now standing, and he's giving me the eye, but I still got my hand on her back. You know what I mean? And but understand that if I get punched, okay, I'm okay with taking a shiner. Okay, I'll play with fire.
So what is your pain threshold here? What is your, I guess, where is the price of OTLK got to be for you to say I'm leaving this bar?
Yeah, like 120, I'd say. Or like 115. 115.
All right. And anything else you're swinging?
Yeah. So honestly, I forgot what I said. So SPAC, EVFM, OTLK.
Yeah, I know. I was like, you don't even know what segment we're on anymore. You're just like, so OTLK and SPAC. And I've been asking about OTLK. Let me tell you, it's like the bar.
Yeah, I really do. Am I forgetting anything else? What else am I forgetting?
EVFM, SPAC. Yeah, I think you got
I think
them.
that's it. Yeah, and I mean like small TRVN.
Yeah. Okay. So yeah, just some leftovers. So you ready for a little Q&A?
Yeah, let's do it.
Do you trade because of the money or because you love it? And what amount is enough? I definitely trade because of the money. I don't have a job, and it is fun. And I love the community. It kind of brings us all together. It's a fun little group that we've all discovered, and yeah, it's been a blast. I do love it, and it's awesome. I love the money as well. What is enough? Probably 150 million. Obviously, I'm thinking like 25 years, but making multiple streams of revenue from trading in general is also a nice little gig. What about you?
Yeah, this is really tough because I think about this a lot. Like 16-year-old me, like it was like I wanted to be Bobby Axelrod or nothing. Like if I didn't have 200 million, then I was a schmook. I think now as I get older and I understand, that money, is fun, but I think I want to work hard until I get to like, maybe like 100 million or something. And then that's when I start really taking the gas pedal off. Like I've talked about this a few times. When I get a little Hugh, I think that'll be important to me is like, it'll be time over, I'll sacrifice some money, over, spending time. So I think that, enough is like when I get to 100 million and maybe like 27, 28 is like when I really want to start taking the gas pedal off.
And start putting your seed out.
Yeah. I mean, it's just like right now I value the money over the time. I'm okay with working 20 hours a day. But I think that when I get older in life, that will do the opposite. Especially because
you're working this hard right now for hopes of in the future, right?
Exactly.
Okay, so the next question is, how do you grow your net worth? Can you go into more detail if it's more to do with being frugal or what? I think being frugal is very important, and just not spending your money on like dumb things. I mean, you just can't afford it. You have no need to buy it.
Yeah. When I hit 2 million, I bought myself like a more expensive watch than I would ever do that. But besides that, I did that just to say that I did it, so that I could like realize the kind of money that we bring in. I kind of, what I mean? Like kind of did that to be like, because right now I keep like $5,000 in my bank account. Like I sweat when I pay like my $1,000 credit card or whatever. So when I did that so that I could understand the kind of money that we're making. But this is we can go into this more in depth another day, but to grow your net worth, it is purely based on two things. It's not based on how much money you make because the money will come. It's about, and everyone says this, but it's so true. It's about how much you save. Now, again, I'm going to have people that come in, Hugh, I got 3 kids, blah, blah, blah. Okay, great. If you're not working somewhere, and my friends that work at big banks like your JP Morgans, your Morgan Stanleys, my biggest issue with working there is that they don't let you trade on the side. And that's, obviously that's not their fault, but you have to understand that if you have more expenses, that means that you need more income. So right now, even to this day, I save so much of my income. And even when I was making, $7,000, $8,000 a year, like, when I was 15, I was saving like virtually everything. I was always running numbers in my head. So again, it's about how much you save, how much your money works for you, okay? Because you got to understand that you're paid based on, when you're an employee, you're paid based on the amount of hours you work in a day. Right now, I'm paid based on how much work I do. I know that if I take a day off, I'm basically losing like a good amount of money. But I'm not paid for my time, I'm paid for my results. When you're an employee, you are paid by how much time you put in. So if you create multiple revenue streams and you save as much as possible, that is how you are going to grow your net worth. Okay, if you can save 80% and also have 2 other revenue streams where you're not paid based on your time, but you're paid based on your results. So that can be, maybe, starting up a podcast or
exactly.
Yeah.
I mean, that's what I'm saying. It's like
real estate.
If the stock market closed next week, I'd still feel relatively comfortable knowing that I have a decent like I'm just trying to build other forms of revenue from doing all this,
Yeah,
just
exactly.
everything you're good at, just try and make it profitable.
Yeah. Still work your job where you're paid. If you feel like you're in a rut, still work your job that pays you based on your time. But if you buy, go to a local ice cream shop and buy into part of that company or something, and even if you're only getting $1,000 a month, that will grow. And you're also paid. You're paid for not doing anything. You're getting $1,000 a month for doing nothing. So I think that's really important to make your money. And, this is going to sound so simple, but nobody understands this. Make sure, first, have a plan. I hate people that just leave it to their financial advisor. You should know where every single dollar of yours and why it's going there. Okay? So understand that. 2.
Arby's, and because they have really good roast beef sandwiches.
Yes. So, make your money work for you, even if it's a small amount. $500 extra a month for doing nothing is huge. That adds up. Okay?
Like, that's your insurance, or I don't know what insurance costs, but it's like that is one bill of yours that is now eliminated.
Exactly, for doing nothing. And here's the thing: is that will grow. And then if you trade on the side, again, and again, it's so awesome when you start making money. And I just have like a frugal gene in me that, like, when I made my first $100,000, I bought sushi. When I made my first $1 million, I bought sushi. Right. That was like my big splurge. So don't increase your life for luxury. Again, when I hit 2 million, I bought a watch. Okay, or 2 million on the year. 2 million on the year. I bought a watch, but that was so that I could kind of see what I was working towards, and that's okay.
Yeah, it's a lot of things. It's like you can put in these extra hours into thing, even if you have the job, and you can cut expenses. Like, I woke up an hour late to record the podcast today, and we really enjoy doing it, but it is extra work. But it's not just like. But I mean, it's the thing is, it's you like you said, if you just keep your costs the same. And even if you need to cut them, you can do that too. Even if you have these 3 kids, do you really need the extra room? Yeah. Like, it's stuff like that. Could you cut it down 400 square feet? Could you rent?
Yeah, and that's really important, is to make your money work for you. And secondly, when you start to get a taste of the money, okay, you have to understand that at this current moment, that it's not enough. That is not enough, that you want more. And again, I say, I bought this expensive watch, and that's okay. That's okay, because I feel that I needed to do something to understand why I was working so hard. So I bought an overpriced, expensive Swiss billionaire watch. But my point is that I'm not going to buy that every other week. If you go and the second that you hit $1 million, you go and buy a new house and your mortgage now doubles. Well, guess what? Now you're in the same exact issue. So instead, take your family on a vacation, a one-time vacation where you're not breaking the bank, but you understand why you're working so hard. And then don't do that every month. Do it once and then be done with it.
Yeah, I think one really bad thing is if someone just has that one big trade. It's like winning the lottery.
Yep. Exactly.
So I think we can kind of go into some of the other questions. Could you elaborate your trading style, Dan, when you say that you play the price action to a new trader who doesn't understand price action? Yeah, so I think it has a lot more to do with maybe the personality of a stock when it comes to the charting part. I just learned how the stock works, and and obviously this will change. I'll have to change this whenever market conditions are different. But as of right now, it works really well for me. And I'm literally just loading these dips and being ballsy in a market that seems to reverse a good bit. And also, they're all kind of running in the same channel. I go by the stocks that I know run. Like TTNP has a nice 28 cents to 33 cents, or 28 to 30, or 30 to 33, which it may seem like it's only 2 cents, and it is, but that's 8 to 10%. So I'm just playing for those quick flips, and I scale in and out really quick, and that's all I do is trade whenever I trade. And then I always just play things that have catalysts, so I can wake up and hope for the best. I love waking up to that like 200%er. There's nothing better.
Nothing better.
Okay, so this one's for Hugh. If you go back 5 years in time, knowing what you know now, what are some key pieces of advice you would give your younger self? Some do's and don'ts, and were you ever a penny flipper?
Yeah, I tried to be a penny flipper, but with my schedule, it was just difficult because my senior year, I was working like 2-3 jobs. I was trying to take some college classes, and I still had high school. So penny flipping became extremely difficult, and I ended up just losing more and more money. If I could tell myself, I'd probably just say, obviously, like at that time, mentally, I was in, a little bit of a difficult time because I had, I was in the middle of adapting to, we talk about it a little bit.
Everyone's telling you all about college and shit, but you're doing a damn good job at trading.
Yeah, well, like 5 years ago, I wasn't touching my first 6 figures yet, so I was still is this a real thing? Blah blah. I was putting in the 20 hours a day, but I wasn't seeing any results. And then on top of that, I don't like to talk about this much, but on top of that, I was trying to get used to my new heart disease, if you will, and adapting to that. So I think that really the biggest thing was just, and I think this is why we really created this podcast, was so that we just keep telling people that like you'll hear me say it over and over again. Nobody is born a good trader. Just keep plugging away, Yeah,
dude. At first I was going to say like, they don't want to hear, just keep trying. But I think like that is like the biggest thing. If you just keep working at it, I mean, obviously there are some things that you just aren't good at. Maybe everyone can't just be a trader, but at the same time, if you truly believe that you can, you are having fun with this, just keep learning and keep at it.
Yeah, I think that's key.
Mine, I think, I know this question was for you, but mine, I know if I went back 5 years, obviously that wouldn't matter. But just one of the major things that I changed, I mentioned this in the past, I changed my stop loss to a limit buy. And it was like just a crazy difference for me. Just because I would notice these stocks just go right past my limit or my stop loss and then just jolt right back up.
Yeah, that's awesome.
Okay, so for your DD of the week, you got something for us?
Yeah, so again, I think it's really important that we talk about, I feel like I say like the same 5 things over and over again, but it works. So play the hot hand. We talk a lot about sympathy plays, and like I don't really love sympathy plays, but when UAVS was up 200%, hell yeah, play Vissel. So the same thing.
Vissel's gonna sizzle.
Yeah, so the same thing is with market sectors. When WTRH was running, so was every other food delivery. So I think that's really important. So with this huge TRVN PDUFA, I'm looking towards LPCN. Now, again, this isn't going to be any crazy DD where I'm connecting, LPCN to Merck or whatever, but we can play the hot hand. They have a PDUFA this month, and now I probably, let me put a little asterisk in there, probably will not hold it through the PDUFA because I think, I don't have it pulled up in front of me, but they've had 3 failed already. Now, maybe like the 4th is the charm, but I'm trying to schedule a call with the management, and that'll give me a better insight to how I feel about holding through the PDUFA. Now, I don't have a position in it yet, and I will not have a position until probably Wednesday because I like my sweet spot.
So another thing about this is you're just playing it for the PDUFA run-up. And for anyone that's kind of confused about that, like I mentioned, he does explain his TRVN DD in episode 3, I believe. And that he kind of goes over the PDUFA run-up and everything if you need to know more about that.
Yes, and again, when we were talking about TRVN, I was so confident that they were going to go through it, and that's because I talked to management. I had understood that they hadn't failed before, but the FDA wanted them to change a few things. So I think, LPCN is in a little bit of a different, area than that, and I don't really necessarily, at this moment, believe in the actual PDUFA getting approved, but that doesn't mean that it can't happen. So my plan is to initiate a position on Wednesday, scale into it depending on where the price is, all the way into a position by Friday, and then play the run-up and beat out, I would say, at least 70% for the PDUFA. Now, if I talk to the management, I learn a little bit more about it, and I like it, then maybe I'll hold. But right now, that's the plan. Nothing crazy.
All right, sweet. So before we get into our scenario and fire reviews, a little update on the Henrik Fisker situation. I've been tossed around by two of the vice president of communications for this interview. We were discussing August 10th, which is tomorrow, but I did get back in touch with Henrik, and he said we'll circle on one of these coming weeks. So it is vague. I've never done this with CEOs before, but we're trying and we're learning, and hopefully we can deliver that soon. But with that being said, the scenario we have this week, it's a good one. You ready?
Yeah, let me hear it.
Yo, Hugh, need your opinion on this. I had this girl I have a crush on over the other night, and we started talking about stocks. Ooh, dude, he would be naked. He'd be butt-ass naked.
Dude.
This
is beautiful.
I told her I've been dabbling in the market since May. Told her I've been pretty successful thanks to you and Atlas. She then throws a curveball and says she's always been interested in the market and wants to get involved. I was speechless. That was the last thing I expected. She began asking a ton of questions about everything. I told her I would set up a day to have her over and help her get started if she was seriously interested. I am now hesitant. I told her it takes time and patience. I don't want to feel responsible if things go south for her. I know you're not a relationship account, but I feel like I can relate to you, so any input or advice would be greatly appreciated. Thank you. Yes, I may have had a few tonight. So, yeah, this is a good one, man. Hugh would
I love this one.
Dude, I mean, you got the floor, buddy.
Okay, 3 quick things. 1, future Mrs. Hugh, if you are listening to this, just whisper. Just whisper.
Our demographic.
PE ratios.
Our demographic is 8% female. So to the 300 that are out there, man.
Listen, if you are the one, okay, understand this, okay? If you want to weigh to my heart, just start, whispering low PE ratios into my ear. 2, how many
Low float
how many girlfriends-
biopharmaceutical stock.
yeah. Ooh. 2, how many girlfriends do you think are going to listen to this and instantly look at their boyfriends now and in the future? I feel like I get this question a lot because it is impressive when you and I and Zach and Bob we're making hundreds and hundreds of thousands, millions of dollars, and they're like, well, shoot, if you can do that from your bedroom, why can't I? Okay, and I think that this is also important. Okay. Because we get this question a lot, and it's important to understand, fellows and women, okay, that she may understand how much you love this, okay, and she may just be doing, keeping the conversation going simply to hang out with you, okay, and because she knows that you love it. All right, I can't even tell you, I mean, just keep that in mind that, I don't want you to go and start, telling her about your favorite Golden Cross SMA, reversal, on the chart and start spitting out fundamental.
Hugh knows from experience that is not the way to get a girl.
Yeah, I'm a total nerd actually, to be honest. But so before you start spitting out fundamental analysis to her, I would really try and understand, is she doing this to hang out with you, bro? Or is she doing this because she wants to?
Well, the thing is, she's, at first I thought he didn't want to have this because he was confused and may not have known enough about stocks that she would be expecting to know. But I think he's mainly worried about that she'll get into stocks and start losing money and she'll be worried. So I think my advice would be, as you explain her questions, make sure she knows that you can lose a shit ton of money in it, and let her know that whenever you started, let's say your average relationship only lasts 8 months. Say it took me around 9 months to really get good at trading.
Yeah.
Just so then, the whole time you're in the relationship and she's losing money, it's not your fault. And then, if she continues to lose money after you break up, it don't matter.
Yeah, who cares then? No, I think, it's really important that, and this is, I still have hundreds of people, reach out to me about this. It's so important to understand a few things. 1, she has to have risk. If she's really into this, okay, if she just wants to hang out with you, then none of this means anything and do your thing, bro. But if she's really into this, she has to understand a few things. One, this is a tough game mentally, okay? And this is a tough game mentally, and most of the girls that, have reached out to me about this, they come back in 3 months and they say, yeah, I couldn't handle it mentally. And that's okay. There's nothing wrong with that. So she has to understand the mental aspect of it, that this game is tough, that most people lose money, and that the successful ones, usually they lost money in the beginning. She really has to understand that it is a grind. It is a grind. And that she has to, again, it sounds like you really like her and that you don't want to lose money, and that's awesome. She needs to start small, okay? So even if she starts with $20, okay, there's nothing wrong with that. Tell her that she needs to be, become consistent. I hate to say this, but when we all talk about trading, we're like, yeah, I made $250,000 on Friday. Nobody understands how much actually went into that. You know what I mean? Like, you made $250,000. That's great. Nobody understands that this is 6 years leading up to it, working 20 hours a day. So she needs to understand. And, of course, when I'm talking to people, and I say I made $250,000, I'm not telling them about how much work went into it. So she, and I'm sure that when you were trying to impress her, you probably weren't telling her how much work went into it. You were probably telling her that, I opened up my Robinhood and, boom, up $2,000. So I think it's really important that she understands how much work goes into it, that she needs to start small, become consistent, and most importantly, if she starts kicking your ass, then you probably should break up with her.
Yeah, you can't let that happen.
Yeah.
Okay, so there's Hugh and Dan's relationship advice. So our lastly news segment, this is called Reviews. I haven't really thought of a good name for it yet, but whenever we get our shirts in, we're going to be giving away 1 week to whoever has the best review. Doesn't have to be funny, it can be nice. But here I've already reached out to a few of these dudes. Some of these are actually pretty hilarious. The first one is, it has been said that you will be the average of your 5 closest friends. If that is the case, Dan is clearly dragging down the average of his guests. Okay, that was good.
Yeah, dude, I'd be at 50 million if it weren't for you.
Yeah, dude, I'd probably be better off as well. So I think this one's my personal favorite. It's called Of Mice and Men for Stocks.
Oh, yeah.
Hugh is the smart and practical George. Dan is the gigantic, physically strong, and mentally handicapped Lenny. I'm 2 for 3. That's not bad. Except he is neither gigantic nor physically strong. And has chicken legs. Continue to listen to see if Hugh lets Dan pet the rabbits. Okay, this was the nicest one. Very well written. Dan provides a sly, aggressive, and conspicuous dialogue, while Hugh provides a clever insight and mediates the podcast. A great mix. The unique factor that these two bring is the originality and confidence. Influencing traders nowadays take themselves way too seriously, and they deter laid-back people that feel as though they're being abused by experience. Dan and Hugh wants best for you and will do it in a professional yet casual style. If you're a young trader or even a newbie, this podcast is perfect. Yeah.
I like that.
Yeah, I do too.
Aggressive. He called you aggressive. He or she.
This one is called The Freaky Friday of Stocks.
I love this one.
A fun story about 2 underprivileged youth halfway across the country who meet on the internet and bond over their mutual love for stocks and FinTwit. First, they swap stories. Then, in a Freaky Friday-esque twist, they switch bodies. Throughout their discovery of their new bodies, our protagonists learn how to cope with their new realities. Dan finds himself in the body of a 21-year-old millionaire with a heart condition and a hot sister. Hugh learns how to cope with partial lung capacity, a damaged liver, and 4 chest hairs. Can Hugh still perform in the market despite his new challenges? Will Dan blow up Hugh's account and or home life? Stay tuned and find out.
I wouldn't trust you
Another
with
good one.
a 1/9 of my account.
Fair. So a 10th is reasonable. And then one last one. Dan and Hugh are honestly the perfect balance and effectively educate the populace on how to trade smart. Dan being the average everyday trader. I feel like I'm a little better than the average everyday, whatever. And then Hugh, the guy with all the knowledge and success to back it up. This way, the sometimes hard to understand terminology can be translated to layman's terms for everybody to understand. Plus, Hugh's laugh is so funny, I'm making it my ringtone.
Hit
I was
me up.
hoping you'd laugh right there. But yeah, dude, I like those, man. Those are good. But yeah, I did say I'd give a t-shirt to those people, and from here on out, we'll be doing one a week for the best one, and it better have a fucking 5-star rating with it too. None of this 1-star bullshit, Alex Cutler. So, again, thank you for tuning in to another episode of Pennies Going in Raw. Thank you so much, and we love you.
Let's get it, baby.
Peace.
Yo. Thanks, guys, for giving us a listen. And if you wouldn't mind heading over to iTunes and dropping us a 5-star rating, that would be much appreciated. Love you guys.